So for the first, we have Mr. Rajshekhar Maya, Associate Vice President and Head of Product Strategy at Finacle Infosys. Mr. Maya has been with Infosys for over 17 years and he specializes in core banking, risk management, and regulations and compliance.
Hello everyone, this is Maya here.
Yes. Our next panelist is Mr. Anthony Lewis, Director of Research at R3. So Anthony also produces reports and runs seminars across evolving concepts in the blockchain field. And before this, he has worked as Edbit and Credit Suisse. And Anthony, if you would like to say something here.
Hi, it's a pleasure to be on the call.
Perfect. So we also have a third panelist, Mr. Anson Zale, and I think he's yet to join the.
Yes, I'm here now.
Okay, perfect. So Mr. Anson is the chairman of Access, Singapore's cryptocurrency and blockchain industry association. He's also the CEO of CoinPep, a payout service which leverages blockchain. CoinPep is funded by 500 startups. So prior to CoinPep, he's been running a private family office in Singapore. So Anson, would you like to add anything here?
No, it's a pleasure to be here as well.
Perfect. So, guys, the purpose of this report was to channelize or find a solution to the prevalent hype across blockchain technology. This has been evident since 2014, and we have seen the investments peaking all through 2016, and some predictions even peg the total investment to reach the $2.5 billion mark. And along with this investment, we also have around an emergence of numerous use cases within the technologies. It's been very overwhelming lately. So that's the reason we came up with organizing a survey report around it to gauge the market sentiment. Yeah. So a brief on the survey report would be, we covered around 100 plus financial services professionals from around 75 plus banks and financial institutions. We asked them several questions and the data is just a representation of these questions. So we also included some 50 plus CXO level participants from the banks, and whatever the survey outcome we got, we have actually bucketed into 6 main categories. These are the opportunities, the use cases, investments, implementation, timeline, and challenges within blockchain. So we'll be going ahead with the content and we'll be starting with the questions in the next slides. And obviously, if you have any questions directed towards the panel, I request you to put the same in the chat box, and towards the end of the session we'll be taking it up. And I also request everyone to mute their microphones except the speakers so that we have a better voice quality. Thank you. Yes. So the summary of findings, let me just give a brief of what are the big chunks of insights which we got from the survey. The first one is that the 50% of banks are already investing in blockchain or will invest in 2017. Then there is an average investment in blockchain in 2017 which has been expected around $1 million. Then obviously around 35 to 40% bankers expect that the first commercial solution would come either from cross-border remittances, digital identity, or clearing and settlement. And apart from this, we also have 50% of bankers who expect to see the commercial adoption of blockchain by 2020. And regarding on the more technology side, 69% are experimenting with permission, while 21% plan to use the hybrid blockchain approach. And again, 70% of the banks are either joining a consortium or working with fintech startups to augment their blockchain capabilities. So these are the basic findings which we have come across through a survey. All right. So let's start with the first category of insight, or the first biggest opportunity which we got from here was what is the single biggest opportunity in using blockchain technology. So our survey participants were asked to rate these opportunities on the scale of 5, and we see that the potential for creating a newly investable assets and reduction in settlement transaction time has has also come up as one of the prominent opportunities. But again, we still need to have our panel's opinion on what, according to them, is the single biggest opportunity in using blockchain. So I'd start with Maya. Maya, what do you think should be would come out as the single biggest opportunity in using blockchain?
Thanks, Aman, for the opportunity to talk to the audience on this occasion. From our own assessment, as well as with the discussion that we've been having with the banks globally for the last 6 to 7 months, we feel that the biggest single opportunity the blockchain will bring is in terms of enhancing the automation. Automation when it comes to in terms of in the area of payments, in the area of documentation, in the area of smart contracts, in the area of secure documentation, each and every use case that we went on discussing with the banks, and every such thing was resulting in bringing in more and more scope for automation, and blockchain was providing that kind of an leverage for the banks to go and automate it. I think in the eve of everybody talking about ubiquitous automation, and in the event where a lot of things are getting on to autonomous mode, whether it is driverless cars or driverless drones and things like that, I think banking is one industry which is also now looking hugely getting benefited because of automation, and blockchain is the answer, and there's a huge opportunity of blockchain bringing in that kind of an automation to banking industry.
All right. That sounds good. So, Anthony, I'd move to you. And according to Rajshekhar, automation, he thinks that is the single biggest opportunity which might, come out of blockchain. As far as your experience is concerned, what do you think would be the single biggest opportunity here?
Sure. So I'm going to talk to a number of these things. I feel that the closest to utility, so the closest to something being commercialized, something being used out there in production usefully, is in the post-trade reconciliation space. That is to reduce risks, and when you reduce risks, it necessarily follows that you reduce costs, because if you can identify risks, there are costs associated with mitigating those. So if you can mitigate them with technology instead of with people, you can create some efficiencies there. So what kind of assets? Well, any assets, any financial assets, because after all, a financial asset is a contract between parties. Maybe it's 2 parties, maybe it's 3, maybe it's more, but usually a financial asset is an agreement between an issuer and an owner or something like that. And this distributed ledger technology allows for the shared control of how these contracts or how these agreements evolve over time. So automation is an easy one to say because IT is all about automation. I don't think anyone can disagree with that. Could that reduce transaction costs? Yes, to the extent that transaction costs build in all the costs of running the transactions, including staff that you hire to fix things when things go wrong. So if things go wrong less, then you can reduce the costs to mitigate the risks. Reducing settlement and transaction time, this is an interesting one. We've seen that sometimes people don't want to reduce settlement time. They're perfectly happy with whatever the number is, let's say 2-day settlement. And if we're talking about equities here. But people, what they want is more transparency over when it will settle. Not necessarily that I want it to settle quicker. I just want to know exactly when it will settle so I can manage my inventory. The transparency among counterparties, that could probably be debated. Yes, it's better for some things to be transparent. I really want to know that what I see in my systems matches exactly what you see in your systems if we're doing business together. But this word transparency, a third party shouldn't necessarily be able to see my trade against you, if you see what I mean. So there's good transparency and then there's unwanted transparency.
Okay, yeah, that's a valid point, Anthony. And the use case which we broadly come across here is improving the existing processes, as in the cumbersome processes for banks, streamlining the operations, and avoiding, for example, in post-trade settlement, it would be reducing the manual reconciliation efforts that has been required to reconcile the faulty trades. So that's one part. But we also have on our panel Mr. Anson, who runs a startup in the blockchain ecosystem. So I'm also curious to know if there are any other newer markets that blockchain is capable of creating. So Anson, would you like to add anything here on the single biggest opportunity for blockchain?
The challenge of answering this question is depending on the stakeholder, like who is actually saying this. So obviously from a bank, it will be different from what a startup saying what's the single biggest opportunity is. Okay, so at least from the banks that I talk to, that we have good relationships with, it's definitely ways to reduce the cost, like exactly what Anthony was saying. So if you get banks to go and venture into something new, because with all the banks being publicly listed, having everything super transparent, and also very short term, it's very hard for them to venture into something super new. Okay, so the best thing is if there are ways to actually cut the costs, reduce the risk, that will be that's the best, at least one of the better ways for banks to approach it. So definitely things that can push towards that direction. Okay, but for startups, fintech startups is different. Fintech startups are here to actually push for new use cases, finding the right customer, finding the right product fit to actually make their startups work. Okay, so by working on, sorry for the background noise because I'm right now outside. So for doing products or working on new projects that have no traction yet or something super new or that changes behavior, unless you're a startup with millions of dollars of funding, it's also very hard to make that real. So most of the startups, even the ones with semi-good funding, over $1 million, for example, would try to work on something with the lowest hanging fruit. The lowest hanging fruit, getting something working, getting some traction. So from a traction perspective, it's the easiest way is to try and go for cross borders. That's what I'm seeing. Because if you do cross-border payments, I'm sorry because I also work on Config, that's why I'm saying this, so I might be a little biased. But what I'm trying to say is something that is the lowest hanging fruit right now is something that actually works without changing the behavior of the customer. Okay, so for example, if someone works on a digital identity, but it basically has to change the behavior of how the consumer or the customer needs to show the identity instead of using a card or maybe using your retinal scan, like getting everyone to do it, that might be hard. So things that don't need to change the behavior, but yet can use new tech to reduce the cost or increase the efficiency would be a better way for the startups. So that's why if I have to answer this question for the startup side, I still think the cross-border is the easiest way to go about it for now.
All right. So that actually amounts to automation on the enterprise side, and if we come on the startup or the newer market side, then cross-border payments or remittances probably is the lowest hanging fruit here. All right. So moving on. Yes. So in this slide, we actually rank the blockchain use cases on the with respect to what priority banks have given them in their testing and application phases. So we have a 5-point scale and we have a number against each use case here. So it's a clear observation here that cross-border payments, digital identity management, and clearing and settlement have emerged as top 3 use cases for testing and application. So again, I'd like to ask you, Maya, here that what do you think? How accurate this survey might turn out, or why do you think that these three emerge as the top use cases with respect to testing and application, as far as your experience is concerned?
Thanks, Aman. I think the survey is depicting our experience on the ground also. So just to give you a perspective in terms of when it comes to cross-border payments, I think all of us are aware that annually there are around $700 billion of remittances and cross-border payments takes place globally. And just to give the context where I'm coming from, and India is the largest recipient of these remittances. It receives almost $70 billion annually out of this $600+ billion that we talked about. And most of these remittances happen between the Middle East and the India corridor. And what is happening before the blockchain coming into picture? There were people spending almost 15 to 20% of every transaction of remittance that they used to do. I'm talking about in the retail space. They used to spend 15 to 20% in the form of fees, exchange, charges, commission, and things like that. And the largest ticket size of those kind of cross-border remittances were around $200. On an average, it is to be around $50 to $60. So you can imagine now if there is a retail payment, an expat trying to send some money back to India from Middle East, and if he has to shell out 15% of the $40, so it's a huge money for him from the perspective of paying it out. So hence what they found out an alternative way to look at in terms of doing a funds transfer, and they went ahead into dealing with intermediaries, whether it is a Western Union money transfer or UAE exchange and those kind of entities. And with blockchain coming in, banks have realized that they are able to now bring the cost down per transaction basis, and as well as provide an online real-time, comprehensively transparent and a trustworthy transaction that can take place between these two corridors. And the second one is digital identity. I think more and more as we see in terms of the theft and around the confidentiality of customer and privacy of customer data and things like that, I think blockchain provides that kind of immutability and as well as a kind of an unchangeable, unhackable kind of a identity management. And if everything can be put onto blockchain and it can be enriched and can be shared by the parties and the stakeholders in due course. So I think again, this is in our experience on the ground also has come out as a significant area of interest for the banks to go ahead and invest in digital identity. The third one is the clearing and settlement. I think the very promise of blockchain is to provide that kind of a distributed ledger and as well as a decentralization, taking the middleman out of the business, and so that you don't have to do one more hop and waste the time in between. And that being the case, you will have a lot of these clearing houses, settlement houses, brokerage houses, stock exchanges not being relevant in the change context going forward. And the survey really reinforces that yes, clearing and settlement is also a very important use case for the testing and as well as for the piloting kind of situation. I think in our opinion, these top three use cases, cross-border payments, digital identity, and the clearing and settlement clearly stands out as the topmost used use cases in our experience as well.
Yeah, that's some very good points from you, Rajsekhar. Thanks for that. And yeah, so it seems that as far as Infosys is concerned, we have total agreement on this slide. So moving on. So this particular data point would deal with respect to the investment readiness of the banks. So we have an observation here that 15% of the banks are already investing, 35% are early followers, as in they're building a business case, they're planning to invest this year. And then we have some laggards. We have 50% of bankers who will invest in future once the technology matures. So my question here to Anthony, you would be, what do you think would be the categorization of the banks which would fall into each of these buckets? As in, this may be a geographical categorization, just maybe with respect to the size, this may be with respect to some particular laws which govern these banks. So what do you have an opinion on what kind of banks which would comprise of each of these categories?
Sure. So I guess this depends on what people mean by investing. We see banks investing in terms of buying startups or investigating buying equity in startups. We see banks throwing resources, so developers at distributed ledger technology projects. Now that's an investment of time for them to understand the technology. So I guess there's different ways of investing. But to come back to your question, the innovators are the ones who are collaborating. That's what we see. For distributed ledger technology, the clues in the distributed, the clues in that first word, this technology demands collaboration. Running a distributed ledger by yourself, for yourself, right now isn't possibly you're not going to get the most out of that. So the innovators are the collaborators. In terms of geography, so our three, we have 80 or almost 80 members coming from pretty much all geographies. So it's hard to say that they're all from Europe or they're all from Asia or something like that. Most geographies we have banks, certainly banks who operate there, but I think we've got banks from headquartered in over 20 different countries across Europe, the Americas, and Asia. And we've got large banks and small banks. So really what it comes down to is specific individuals. We have people who are intelligent people who are interested in this technology, whether they come from the front office, the middle office, controls, the back office, or technology. They have different perspectives and different incentives depending on which angle they're from. So, for example, the technologists love this technology because we're doing new things. We have the ability to do new things, which is the shared control of how data evolves across entities. If you come from the front office, or the business side, it's about how do you make money, how do you reduce costs. If you come from control functions, it's how do I use this technology to understand what's going on better. And if you come from the back office, it's possibly about reconciliation. How do I remove some of these headaches that I currently have? They understand that the one thing they have in common is they understand that they need to spend to understand, rather than letting the opportunities pass by. And those who are spending have the opportunity to drive the narrative. This is a story which it's being written day by day by the participants. Nothing's set in stone. There isn't a future. We're writing this future as we go along. So the innovators are the ones who are investing, who are spending the time thinking about this and driving the technology forward. It's a fascinating industry.
All right. Yeah. So those were some good points, Anthony. And let's move on to the other use case. Yeah, this slide deals on the commercial viability of the use case. So apart from the testing and application phase, we also have some ranking on the basis of commercial viability. So here again we see the top 3 use cases appearing, but here we also have a letter of credit processes which have been rated quite highly by the survey participants. So my question here would be to Anson. What do you think that trade finance or the 4th use case which has just come up here on the basis of commercial viability, what do you think is the reasoning behind letter of credit processes or trade finance operations coming in parallel with use cases like cross-border payments or digital identity? If we look at the commercial applications, considering we also understand that blockchain is a technology for multiple systems who do not trust each other, and by an observation, trade finance ecosystem very resembles to that. So I'd just like to know your opinion on this.
Okay, so I can answer from the experience of talking to the customers and potential customers in this trade, but not necessarily in terms of what banks can do. Okay, so when we talk to customers that want to do trade, want to deal with letter of credit, they are always complaining that the cost of letter of credit is very expensive. Okay, and the only way to make it happen has to be an escrow as a bank. But the problem today is that is still the only way that's the most trusted in order for letter of credit to actually happen. You can't really get an escrow that's a non-bank because the trust of getting it is not there. So why is letter of credit still something that is something that can be pursued? Because by having the banks working, by knowing the exact cost there, because you know that the margins of the letter of credit is super high, even reducing that by 20-30%, okay, can already help the customer's margin by a lot. So I do understand, like you have projects from in Singapore where HSBC and the Singapore government, the regulator IDA, now called IMDA, and Bank of America working on trade finance. Also, it's also a Hyperledger project trying to lower the costs because, as I said before, banks, their priority is to get the costs lowered, and even having this as a test project and with so much margin there, lowering just by a little bit can definitely do a lot of good already for the customers.
Okay. So we see that unit economics come to a great play here if we are talking about the trade finance ecosystem, and that probably might trigger the commercial adoption of this as a prominent use case for blockchain. Yeah. So moving on. So this slide deals with the implementation of blockchain or the broader distributed ledger technology, which is it's generally referred to as. And we have encountered with multiple approaches that banks tend to adopt to implement blockchain, and of which we have the consortium approach, we have collaboration with fintech partners, we have collaboration with established tech vendors, and then we obviously have the option of developing an internal team. So my question would be here for Mr. Maya here, that what do you think has the most chances of emerging as the most successful one? I know there's not a black or white question, but we would like to know your opinion.
Thanks, Aman. In fact, again, I have to go back to our experience of having worked with the banks and the discussions with them on our approach and as well as their preference. I feel the first and the third, which is working with the consortium of banks and as well as the collaboration with the established tech partners, is going to succeed going forward. Whereas banks are experimenting, as the report rightly says, in terms of some of them are trying to invest or take a stake in some fintech startup companies so that they don't miss out on the opportunity. And some of them are trying to do internally, which is indicated in the survey, around 20%. But I think largely in next 6 to 8 months or in 6 to 12 months kind of a time period, if you see, I think the last bucket, which is being developed by internal team, is going to vanish or it's going to become negligible. And that percentage is going to move predominantly to collaboration with established tech partners and working with the consortium of banks. I think that will be the trend that we witness going forward based on the experience and based on the collaboration and based on the discussion that we have had with the banks globally. Having said that, I think it also depends. The success of the consortium of banks and as well as with the tech partners depends on in terms of where exactly the investments are coming in and how much of investments are going to pump in, because as the technology is also getting evolved and there will be an expectations of a regulatory framework, regulatory guidelines, and any new technology will have to have some standards, interoperability being coming into picture. I think you are already seeing few questions on the chat. I think some of these questions are also being asked by the audience. I think those questions will become very, very important to respond. So whoever answers those questions and have solutions for that, for example, whether the consortium has those questions and answers and ready itself for interoperability, or the tech partners come together, the large ones, the bigger companies come together and develop some kind of a standard and agree to collaborate and work in tandem. I think that depends the future of adoption when it comes to in terms of the most emerging standard from an implementation point of view.
Yeah. Thanks, Rana. That actually makes sense, and it appears that we have a waiting game here still. We need to wait and watch how things turn up, right? So moving on. Yeah, so we also asked our survey participants as to what, according to them, would be a reasonable timeline when all of these DLT use cases actually matures. So we gave them around 4 options that would be around 2018. It's on a very optimistic side to being a no visibility to being the most pessimistic side. So also this is very specific to banking use cases. So my question again here will be for Anson, and it would be on the lines of how realistic do you think that this timeline for commercial adoption is, and what factors actually influence this timeline? If you'd be able to elaborate on that, then that would be really good.
Okay. I initially thought this was adoption for the banks. So I guess this is in terms of adoption for the customers, right? Is that what this is focusing on? Just want to get an answer correctly.
Adoption with respect to the banking use cases. For example, a bank would want a blockchain enabled cross-border money transfer system. So how any of these use cases, what is the timeline on adoption of that?
Okay, this question, I think, actually, I don't want to throw the question away, but if it's actually Anthony more than myself, but definitely I think I can.
We'll have Anthony's opinion also.
Bit. Yeah.
Yeah, sure. We'll have Anthony's opinion also. Yeah. It could be a rotating question, not a problem.
Oh, okay. So, well, at least from when I'm speaking with the banks, yes, a lot of the banks are working on POCs now, and some of them actually coming out before going towards the pilot stage. However, with a startup mindset, looking at how the banks are doing it, obviously working on a POC and then even getting on a pilot stage, there's still the element if the customer will actually start using it. Okay, so from that perspective, that is still the relative unknown. However, if it's products or new services that are fixing the back end, then obviously you don't need to go towards the customer to actually sell them these new services, because they will actually be using it without themselves knowing. Okay, so to answer this question, at least from my experience in talking to the banks, the existing infrastructure, there definitely will be changes. Even though if it's not fully adopted from the customer side, there will be changes internally. At 2020, I'm actually quite surprised that it's 2020. I think it will take a little bit longer from the banking side, but definitely from the back, things are moving towards there where it's becoming more. It's centralized, but in a way where, for example, AFRI is going, everything will be much more distributed. But 2020, in my view, it's a little bit, it's still a little bit too early.
Hey, thanks. Anson, it's Anthony here.
Yes.
Thanks for passing this to me. Actually, I'm going to come up with a slightly different view. There is tremendous pressure on DLT to succeed. If you think of the dollars that have been put into the dollars that have been spent, and the investors who are waiting for a return, and the banks who have invested and they're waiting for the promised cost reductions and the risk reductions, there's tremendous pressure to deliver something. I think we're going to see something this year. I think by the end of the year we will be seeing maybe not revolutionary stuff, but I think we'll be seeing real useful applications built on top of distributed ledgers that actually add value they may not increase revenues, but we're looking at the cost lines or the risk lines here. I think by the end of the year we will have things in production working that are actually benefiting businesses. It's interesting because about 12 months ago people were saying, oh, this is at least 10 years away, and then it became, oh, at least 5 years away, and this pressure from the investors has forced a bit of a rethink. And also the technology's moved on as well. So the technology that we had in DLT, distributed ledger technology, that we had a year ago, possibly couldn't have facilitated apps by this time. But the underlying technology is being built, is being improved on. And right now, it's lining up such that by the end of the year, I think we will have something working. Maybe not industry-wide, maybe it's bilateral, trilateral, but I think it's sooner than people might think.
Okay.
Aman, Maya here, I think from our own perspective, we also tend to see the adoption increasing quite fast. So if you had asked the same question to us around 2 quarters or 3 quarters ago, then we would also been apprehensive in terms of the production environment or commercial adoption picking up. But I think the way we see the things are moving, I agree with Anthony, this faster adoption is taking place. And just to give you a perspective, around December 2015, the World Economic Forum went ahead and published 6 mega trends report in the IT. And one of that was around the blockchain. And they did mention that the blockchain adoption is going to reach mass adoption by the year 2027. And they call it as a tipping point. And while this was announced in December 2015, by June 2016, around 6 months back, they went ahead and announced a latest update to the older report saying that by 2017 end, in their opinion, based on their survey, almost 70 to 80% of the banks are going to adopt, pilot, and commercially launch applications using the blockchain and distributed ledger technologies, which is like significantly advancing the timelines that they had given based on the survey that they conducted in December 2015. So as we see, to summarize, I think the adoption rates are increasing faster. I think we are beyond the stage of awareness and exploration and education and things like that. Banks know the advantage of it. The cost pressures and the competition pressure is increasing. And more importantly than anything else is the regulators' awareness in terms of either the central banks and the governmental agencies, they themselves coming forward to evaluate and leverage the benefits of blockchain is pushing this adoption much faster than what we expected. I'll stop here, Ramon.
Thanks, Anthony and Maya. Those were some really great points. So even our next question would be again, you'd have much to say about this also. So this is again a 5-point number ranking which we requested our service to provide us with, and this ranks the challenges to the adoption of the blockchain technology. And we see that the readiness of the ecosystem and then integration with legacy systems are the 2 top challenges which have come out from the survey. And I'd first like Anthony, your opinion on what do you think, how reasonable this data point seems to you?
Yeah, sure. No, I think this is quite accurate. Maya mentioned a World Economic Forum report. I think we're talking about the same one. They issued one last August, talking about needing deep collaboration between 3 parties, between incumbents, innovators, and regulators. And now if you think they're very, very different types of people and businesses, and it takes time to build that trust, to discover how to align incentives and to discover business models. That collaboration, before you even start thinking about the technology, that collaboration takes time to build. So that is key. Collaboration is clearly the key, not just within industry incumbents, but with the regulators and with the innovators. And that's what we're focused on at R3, getting competitors, traditionally very fierce competitors, to collaborate and create value for the whole industry, including the startups, and including value for the regulators, so they can get what they need. Looking at this list, it talks about integration with legacy systems. Now that's always going to be a problem. So you have to think about how you approach that. So you can either start with a product that is simple, a simple product that doesn't touch many systems, and you can try and replace that by doing a parallel test and then a replacement. Or you pick an extremely new product which may not have, which in banks may not have kind of legacy pipes, and the pipes are just getting built, and you pick a very new product that aren't so embedded, that isn't so embedded with the legacy systems, and you try and approach it that way. So either something simple or something new. And speaking of legacy, I'm developing these thoughts. I've been developing these thoughts over the past couple of weeks, but it seems to me that the current system, the way we do things now, is a workaround. Okay, so imagine if you're going to build a technology from scratch where knowledge of shared facts, facts shared between participants, that knowledge was the most important thing. You probably wouldn't approach it by building separate systems in separate organizations, coded by different people, designed a different way in different technologies that reconcile every now and again, right? That wouldn't be the way you'd approach it. What you would do is you'd use a technology that ensures mutual agreement at every point in time, mutual control of that data every single time it changes. And this is what we're building. This is distributed ledger technology. So in my head, currently, we've been using a kind of hacky workaround because the technology hasn't existed. DLT comes along, and that is the strategic solution. So distributed ledgers are the enabling technology that lets us do business better, and that strategic solution will overcome all those obstacles that need to be overcome, because what we currently have is a hacky workaround.
Yeah, that was a very elaborate response, Anthony. Maya, what do you think? How reasonable these challenges seem to you?
Yes, Simon. I think, see, unlike other technologies where banks would have taken the first mover advantage, and they would have taken the technology to beat the competition, whether it is in the area of Web 2.0 or mobility or analytics or for that matter cloud. I think blockchain is completely different from all those technologies. This is going to be a collaborative play. So no individual bank can say that I'm going to use blockchain to beat the competition, because it is the success of blockchain depends on the network of networks. So banks have to come together to leverage this technology and the usage of this technology. And unfortunately, we also see that banks are still in that mindset of saying that how can I use this technology ahead of another bank in a standalone mode. And we've been educating and telling that it is not that you will get benefited, but even if you get benefited, it's in a limited way. But the success and the usage of the technology comes in handy only when you have all your ecosystem players coming into picture. And that is taking some time, because banks have to start talking to their competition next door and invite them and make sure that they have those bilateral agreements and arrangements being established, and they understand this entire permission ledger concept, how it works, because some of their data can also be seen by the competition. The second thing that we've also seen, the ecosystem also requires interoperability. Like, for example, when internet was introduced way back in 1990s, it also underwent similar challenges in terms of there are multiple standards and multiple browsers not talking to each other. I think slowly there was a consortium established like www.consortium, and they started bringing in the harmony and the standards along with, and then TCP/IP, HTML, HTTP, all of those become standards. So now we are all getting the benefit of interoperability across this internet usage. I think similar interoperability is also required, because as we speak, there are multiple flavors of blockchain technologies being used and developed by multiple players. There is an R3, which Anthony represents. There is an IBM Hyperledger, and there is blockchain. There is Ethereum, and there's Ripple. So how to make sure that all of these different flavors talk to each other so that the benefit of blockchain moves to everybody. And that in itself is an ecosystem building act. So all these players have to come together, prepare that interoperability so that the transaction takes place seamlessly between the entities which are using multiple flavors. I think that is where even we are seeing some kind of an investments happening from the same consortium, W3C, which built the Internet Consortium. We're also trying to build an interledger which talks between these multiple distributed ledgers, so to bring in that kind of an harmony. I think that is the biggest challenge that we also seeing in at least in next 2 to 3 quarters when it comes to in terms of the full usage of the blockchain at the fullest extent.
Thanks, Maya, for the response. That actually, I think the points put by Maya and Anthony both support the first two challenges, the top 2 challenges which our survey participants actually came across with. So we have close to around 13 to 14 minutes to take some questions, and we already have a lot of questions for the panel, and we'll try to cover as many questions as possible, but if given the time constraints, there are only a few we can cover. Right. So we'll be starting with, there's a question by Mr. Ganeshan Ramakrishnan. So it says that there is also a talk around that the banks should not waste money with respect to replacement of their core technology, and should look at blockchain for its needs. Instead of that, the existing systems can be optimized with the use of the blockchain. So is there anything you'd like to add here, Anthony or Maya? Anthony, you first.
Hey, can you repeat the question? I'm trying to look on the chat. Is this the bottom of the chat or the top of the chat? Sorry.
Yeah, just let me repeat the question. So the question is, the existing systems can be optimized with the use of blockchain and can be optimized to a level which is satisfactory enough to not replace the existing system, entirely replacing the core system. So do you think there's, what do you think, have an opinion on this?
Yeah, sure. So blockchain, distributed ledger technology is an enabling technology. You run a node on your servers. Node just basically means some software that connects to other people's nodes. You run it on your servers, and it talks to the other guys, and it just ensures that the data that you see in your system is the same as the data they see in their system. And as that data changes, you're both in consensus of that fact. Consensus basically means agreement. So you can run this piece of software, you can connect that to other core banking systems, and you can run kind of internal reconciliations between your distributed ledger node and your internal systems. Now that means that you still have to run reconciliations, but the systems that you're reconciling against are both internal as opposed to one being external and one being internal. So you have control over both the systems. So that's easier. You don't rip something out and replace it with quote unquote blockchain. That's not kind of how it works. We didn't rip things out and replace it with HTTP when the internet came along. We use these protocols to communicate, to do what they, we use them to do what they do best, to take advantage of what they have to offer. So, you know, I hope that gives some sort of color. I hope that answers the question.
Okay. So I think
Aman, Maya here, I'll just add to what Anthony said. See, every technology, when it gets added to the existing pool of technologies, its aim is to make sure that it augments and amplifies different technologies. To summarize my answer to Ganesh, the blockchain is not at this point in time going to promise a replacement of a core banking system, at least at this current stage and the current state where it is, but it's obviously going to augment and amplify and sit on top of core banking to provide and improve the efficiencies, automation, trust and transparency, and reconciliation capabilities. But it is at this point in time not designed to help banks to define products like a deposit product, an interest computation for that, fees computation for that, or a lending product, computing the payment schedules, or even for that matter, go ahead and define an International Accounting Standard 39, an IFRS 9, which are all going to be built in a core banking layer. And those things today, it is not possible in the blockchain layer. So it's an enabler, as Anthony mentioned. Going forward, people can build applications on top of it. But at this point in time, it is not a replacement to a core banking system. Banks which are struggling with the legacy core banking systems will have to now look at replacing that with the modern core banking system. Plus, on top of it, implement blockchain to augment and amplify their transaction capabilities and improve the efficiencies. I'll stop here, Aman.
Yeah. Thanks for the input, Maya. And a while back, you also mentioned the importance of regulatory bodies and the importance of providers to work closely with the regulation setting bodies in countries, right? So we have a question from Shweta here, which actually deals with the same thing. It actually is a question from a bank's perspective, that how secure would the blockchain technology would be, considering there is no, as of now, we don't have any regulatory specifications or any regulatory body governing the blockchain developments. So Maya, do you have anything to add on this?
Yes, thanks, Aman. Shweta, if you now look at the whole prominence that the blockchain has come to a stage where it is today is because of there are no central bodies or regulators controlling it. And it has been self-sustaining and the community is supporting it, and the underlying technology blockchain is safe and secure. Still till today it has not been hacked, and that itself gives you the confidence in terms of there is no need for another central body to come and regulate it. Having said that, what the regulators will be interested is in terms of how exactly the funds gets transmitted and the end users and traceability of those funds. Today, if you look at most of the regulatory bodies are apprehensive about dealing with Bitcoin, which is sitting on top of a blockchain technology, because Bitcoin works on an anonymous basis. That means you wouldn't know who's the buyer and who's the seller of a Bitcoin in the blockchain network. But what central banks and the central regulatory agencies are interested in, as long as you have a non-anonymous bodies sitting on the either side to complete a transaction. That means on the one side you have a KYC checked customer, that is know your customer check has been carried out. On the other side also the KYC check has been carried out. And the entire transaction can be traced end to end. I think regulators are happy about it. And we've been working with the regulators closely in few countries, including in India. And India has taken a forward-looking view about the usage and the benefits of blockchain. And they have come out with a white paper in January. And I would request you people to go through that white paper, which is basically looking at how to use the distributed ledger and the blockchain and the application of that use cases in the banking area. So there are acceptances and awareness that is being created in the regulators, and they don't want to control it, but they want to understand and they want to make sure that it works seamlessly and there is no loss of confidentiality, data privacy, laws being broken, or the money being used for money laundering and terrorist activities. These are the things that typical regulator is worried about. As long as the technology takes care of that, they are happy. I'll stop here.
Hi, it's Anthony here. I actually have a very different view on that. The question itself, I think that it is regulated. Every single bank I talk to, they are regulated by their regulators in terms of what technology they use. There's usually some sort of principles for financial market infrastructures. There's usually some sort of tech risk. Every bank I've spoken to gets audited by their regulator on how they use technology. So I think it is heavily regulated, actually, to the extent that the users of the technology, the banks, are regulated in what technology they use. So in those terms, then, what needs to happen next? Well, what needs to happen is regulators need to understand this technology, what it can do, what it can't do, what it promises, what its limitations are, and then be able to evolve their principles and their regulations to take into account this this new enabling technology.
Thanks, Anthony and Maya for the inputs. And we all, Maya, a while back we were also discussing the analogy with internet. Blockchain has been and compared with the evolution of internet. Just to understand the where we are at blockchain, right? So we have a question here from Rajneesh. The question basically is that any technology is adapted into a only when it has three basic conditions met, and that's in a particular order, which is first it should be proven, second it should have developers, and the third it should be again globally adapted. So that actually if we put that into the context of blockchain, what do you think, Anthony, is the status of blockchain market currently? As in, is it proven, and then do we have enough talent for it? And again, to what extent the global adoption of the technology has achieved?
Yeah, sure. I don't think it's as binary as that. I'm reading some of these questions, and they're quite. It's either 100% adoption or 0%, and if it's 0%, it's going to fail. If it's 100%, only when it's 100%, it will succeed. I think that's kind of true. If you want to play in Bitcoin, you have to have a Bitcoin address and you have to use Bitcoin. But with distributed ledgers between entities, you can start seeing benefits the moment you join up two entities on a distributed ledger. Because for the first time, you know that what you see in your systems is what they're seeing in their systems, and as that data changes, you have mutual consent over those changes. So it's not quite as binary as that, and there are incremental benefits the moment you have more than one entity using one. Now, of course, the more people you have, the more entities you have on a network, you do get a network effect kicking in, and you get incrementally more benefits. But it's not zero all the way until it's one. I think it's incremental.
Maya, do you have anything to add here?
Yes, Aman. Rajneesh, if you look at in terms of your first question, whether it is proven, I think the entire Bitcoin network today, which is dependent on the blockchain, is working very fine. Millions of transactions take place and billions of dollars get exchanged, which is the largest the blockchain network that you can imagine, and it's working very fine. And similarly, if you now look at in terms of the interest shown by the bigger companies and the investment that are making in that, whether it's Microsoft or an IBM, or it is company banks which are like multi-billion-dollar assets banks, they're all looking at investing and leveraging this technology because they see there is a proven capability in terms of when it comes to using it for their banking business. The second one is, your question is it been supported by the community? The entire blockchain itself is an open source, and there are universities, projects and research is going on, and you have the blockchain community which keeps working on it, and there are millions of miners whose life depends on mining the blockchain and the Bitcoin and making sure that the consensus is provided, and they are spending almost day and night in that. And the third one is in terms of your question is around, okay, it's proven, it is adoption, and third one is in terms of the success. So the success is too early to talk about. I think the benefits are there, the potential is there, the opportunity is there. I think in next 2 to 3 quarters, you should see some of the adoptions in the banking space and commercial production environment going live, and slowly the banks will start realizing the benefits out of that.
Yeah. Thanks a lot, Maya.
So I'd like to just add one more point. So basically, adoption is not only about the technology or if we just have it there. Most of the time it's also about the timing, if it's actually coming out at the right time. So for example, the tablets, okay, iPad was not the first one to make tablets. Tablets actually existed for more than 10 years. The Japanese had it for a long time, but it just wasn't, they weren't able to get the adoption that they needed. Another good example is the luggage that we use today. When we pull the baggages, it's usually on 2 wheels. Now most of us have the 4-wheel luggage. And again, the Japanese had it way before that. So it's in terms of mass adoption, sometimes it just we do rely on the right timing for that. And also for the technologies today, let's say if you say Bitcoin or even Ripple, Ethereum, there are guys that are so deep into it that will find ways to make easier APIs for people to use. So because APIs is becoming a very common thing, we actually have the technology. Just like the banks now, it's because they're so regulated on what technologies they have to use. Even MAS has to regulate what do they outsource as well. MAS is the Central Bank of Singapore. So it's more like communication is now the main bottleneck to actually push, at least get things allowed to be pushed up before you can actually get the customer. So my point is, yeah, communication is still, I think, the main bottleneck before you can really do more tests to see if you can adopt certain technologies within blockchain.
Yeah. Thank you, and so those were some really good inputs from your side. So I think we are out of time here, and I would like to thank all the panelists for giving out their time, and also all the attendees who took out 1 hour from their busy schedule. And we'll also be sending out a video recording of the webinar along with the survey on to which you can give a feedback on how the webinar functioned. And thanks a lot. And this would be.
Thank you.
Signing off.